Good morning, traders. Today is the 2nd of February. My name is Neville Hornsey, market and futures trading. And today I'll be looking at the US ADP NFP numbers. Okay, before we get into the economic data, we're going to look at the Forex heat map on YouTrading.com. The euro is doing well today. The yen was strong as well. And we had weakness in the Canadian dollar and New Zealand dollar, but overall the US dollar is the weakest. So it looks more like a risk off day today, probably expecting to see some sort of weakness come into equities and commodities. And we'll just have a look at the charts. So active trader at the moment showing that the S&P 500 is rising. So if we get a bad ADP number today, I'm expecting to see this roll over. If we get a good one today, then we might push up towards the 4,650, maybe up to the 4,700. Looking at the economic calendar, we can see that euro inflation data, flash data, so it's the sort of initial readings, came in better than expected at 5.1%, above the 4.4% expectations and above the previous reading. So ECB might look at this and think they may have to be a little bit more hawkish in their sort of tone. Then the euro itself will be rising on the back of that expectation. Looking down here this afternoon, we're going to see ADP numbers, and previous number came in at 807,000, and this month they're expecting to see a reduction down to 207,000. So if we get a bad ADP number, so below expectations, some analysts are thinking 50K, some are expecting 350. So if we get down towards 50K, then I'm imagining the S&P 500 is going to really sell off. Just moving over to Excel, here is a chart of the ADP number versus the NFP number. And we've started from after the pandemic. So we had a big rise in employment numbers, and then we had a big drop down towards normal levels. So now we can sort of see how the ADP and NFP sort of correlates or have some sort of relationship. And I think it's quite easy to see with this sort of data that they don't match each other like step for step, but they do sort of follow a similar trend. So if we do see this blue line here, the ADP number come down today, then I'm expecting to see the NFP sort of stay low, sort of showing that there's been less hires. Now, why might there be less hires? If we go to this chart here, this is the US Treasury General Account where they hold their money at the Fed. And you can see they parked trillions of dollars back in the sort of pandemic sort of time. They had to reduce that by mandate. So US Treasury Secretary Yellen has reduced that, but now we're sort of seeing this blue line creeping back up. That means that they are taking in more money than they are spending. If we look here, got the surplus versus the deficit numbers of recent times. So 20th of January, I noticed that the US government on a monthly basis was starting to balance the books, which meant that they weren't able to spend as much as they are taking in. We didn't get the Build Back Better plan, so there's no sort of stimulus, if you like, coming in from the US federal government. If we see here on the right-hand side, got withheld income and employment tax. Now this has been rising, up until sort of mid-January, then a bit of a decline towards the end of January, and maybe even starting to tick up again. Normally when this rises, I think it's a good idea to sort of correlate that with the jobs numbers, because as more people get employed, they have to pay more tax. But this looks more like it was taxing everyone's savings. Looking down here, this is the US fiscal flows. So the green line is the current fiscal year. And you can see it's similar to the previous fiscal year in black, but it is starting to come in lower. If we were to get below previous year's fiscal flows, then that would sort of show how detrimental this lack of stimulus, lack of spending is going to be on the S&P 500 and other equities. Looking here, got bank credit in blue. That had obviously been declining as banks were worried about being able to cover any sort of defaults in loans, and also when the Treasury were reducing their balance sheet, they were putting all of these reserves on the banks, which meant that their reserve ratios were impeded and they couldn't lend based on the reserve ratios. However, that has now changed, and we're sort of seeing like a tick up until the last couple of weeks where it's starting to decline. And with less money coming from US fiscal flows and less money coming from the bank credit, the S&P 500 corporations might not have as good as earnings going into the future. And if they don't have good earnings and profits, then they're going to start laying people off, which is why I don't think if that happens, we're going to see the NFP number get back up to like 550,000. I think it's going to stay, below that basically. All right. That's why I think we're going to see lower NFP and ADP coming into this. When a government runs a fiscal surplus, then other governments and money managers around the world look to that currency as being stronger. So I'm expecting to see the US dollar increase. We might come down to sort of these support levels here. The sort of 61.8 retracement is just around 95.80, support around 95.80, and then just below 95.30 is where I'm expecting the US dollar to sort of base out before rising. If we were to get lower, then we take out the swing low and test the 200 daily EMA, look for support to hold, and then look for rejection, and then look to sort of continue this trend higher. Okay, I hope that explains everything I'm looking at, and I'll speak to you later.